We start this video with a couple of questions. Here is a question. If everyone is using sound analysis, technical analysis, fundamental analysis to trade, can you, the retail trader, day trader, make any money in trading? And here is a similar question. Can a retail, that would be us, day trader, compete against professional entities like hedge fund managers that use professional high-speed software and hardware? If you thought I was going to answer that question directly, you're watching the wrong video. Sorry. I think each person needs to research and form their own opinions about the topic. Can you make money against the pros, against programs? But those are questions that I think you might want to have in mind as you're trying to learn all of this, all of the basics. If you still want to trade, there's no point worrying about that if you haven't even learned the basics. I'm not trying to turn you off from day trading. Next is something that may give you some hope to keep learning. So with this video, let's try to be more judicious with our time, and let's try to pick what candlestick patterns to first take a look at and learn. So before we get into that, let me just read this. Candlestick pattern reliability. Not all candlestick patterns work equally well. Their huge popularity has lowered reliability because they've been analyzed by hedge funds and their algorithms. These well-funded players rely on lightning speed execution to trade against retail investors and traditional fund managers who execute technical analysis strategies found in popular texts. Don't fall asleep on me here. Pay attention. In other words, hedge fund managers use software to trap participants looking for high odds, bullish or bearish outcomes. That's all the bad news, and be careful and what you're up against, as a short way of putting it. However, reliable patterns continue to appear, allowing for short and long-term profit opportunities. Before we go any further, now, and it's probably past time that I should have mentioned this, we need to cover one more basic concept, and that is consolidation. And I tried to think of simple ways or single words actually to give you the definition of consolidation. Think of sideways movement, narrow, meaning not a lot of volatility. It's indeterminate and it causes indecision. Probably not a lot of trading opportunity for a day trader. I'm just going to give you some examples. So here's one area. So this was an upward trend, although looking at it here, not a lot of volatility anyway, but regardless, they're trying to say that in this example, the sideways here, that's consolidation. Here's one that I've seen. So sort of, you have, let's start from here only. You have this large gap, and then, let's sell, and then it starts to fill in the gaps that, the price increments that it should have gone, had it gone up naturally. But then here we have it tapering off, but then going sideways and lower, smaller and smaller fluctuations. So that's another form of consolidation. So I thought I would try to keep it simple and draw my own and then explain along the way. So we have a chart and we see something we're familiar with, and this is an upward trend. And we know that we can trade in an upward trend. The trend is your friend, remember that? Then we have this sideways movement with not a lot of volatility, kind of narrow range. Then we have a downward trend, and again, the trend is your friend, and we can find opportunities to trade there. And then we have this other sideways movement. So we draw our support and resistance trend lines, and we see we've done this before, right? And so we know that we can buy and sell here, for instance, or here. These two areas, this area and this area, are examples of consolidation. Here's another familiar chart where we have the gap, the downward part, and then filling in the gap. And you may or may not be able to trade in this part, but you've seen it where as it approaches the previous point of resistance, the volume goes down, the pricings go down. Not a good moment to trade. It's consolidating here. It can break out, perhaps, perhaps not. But right now, I just wanted to define or show examples of consolidation. And we probably don't like to see this, but this is another example of consolidation where this would be the area here. Now, however, you could say this part could be the act or the transition to consolidation. It is consolidating. One more example. Here is the act or the transition into consolidation. So it is consolidating, hitting up against a hard resistance line, and the waves getting smaller and smaller. Now that you've seen actual visual examples, we can look at the definition in text. So stocks under consolidation trade in a limited range. We saw that. Identifying the consolidating stocks involves looking for those that have steady, horizontal, support and resistance level, trade in a narrow range, and have low trading volumes. An important step in trading consolidation patterns involves determining or assessing how long has that pattern held. For example, the one I showed you where you had the spike, the gap, then the downtrend, and then slowly uptrending to filling in the gap and approaching that hard resistance. As it gets and starts bumping up against that top resistance and getting smaller, you get this sense that it could break out any moment. So how long has it been in that pattern is a question. Now, they're saying here, I don't know about as newbie traders, trading on narrowly consolidated stocks can happen, but there's often less room for profit due to the small range. That's obvious. All right, so in this video, we asked, can we compete? Can we compete against the professionals with all of their knowledge, their equipment? And I left that for you as questions for you to ask yourself and do some research on. We introduced the idea that maybe we can because there are patterns that can still be reliable. And I just introduced the idea. I haven't talked about any of those patterns, but I introduced the idea so that we can spend our time trying to be familiar with patterns that are reliable versus just any old patterns. And before doing that, I introduced the term consolidation. So we will start jumping into some of these reliable patterns in the next video.